So Alibaba was trading roughly around $317 per share back in October of 2020, and now it's trading around $228 per share. So I know the question everybody wants answered is this stock a buy? Should we be buying Alibaba right now, or should we wait to see if it falls further? Kind of what's going on with this stock, and is it time to invest? Well, of course, we're going to answer all of those questions in this video. We're going to go through a free stock analysis. We're going to take a look at the graph and see what it all means. So if this sounds like something you're interested in, if you're ready to pull the trigger on Alibaba, let's get started. What's up, everybody? I'm Clay. I'm here with VectorVest, and like I said before, we're going to be talking about Alibaba in this video. Now, if you could, do me a favor, just click that like button if you like the content that VectorVest posts here, and make sure if the subscribe button is red, you go ahead and click it and join the VV Nation and subscribe to the channel. Alright, so let's get right into it. Everybody wants to know whether or not this is the time to invest in Alibaba. Of course, it seems really cheap right now because it was trading at a little bit above $300 per share a couple months ago. And now it's kind of trading around $200 per share after bouncing off a little bit of support. So let's go ahead, and first I want to go through and look at the graph, okay? There's something very interesting that you need to see on this graph, and I think it could help all of us be better traders and better understand earnings per share and the fact that earnings per share are the force or the engine that drives stocks higher. So this is a perfect example, and I think it really warrants taking a look at it. So let's take a look at the graph right now and see what I mean. So as we can see here, Alibaba started the year out and fell a little bit at the beginning of the year, falling down to around $180 per share. And after that, it was able to climb very nicely. Now, very important, I want you to notice here, on or around October 21st, October 22nd, we saw earnings drop off from roughly $6.78 per share all the way down to $3.35 per share. Now, when we see a huge drop off like this, when it's almost like earnings fall off a cliff, this should be a warning sign. Okay, yes, earnings are still positive, but they were cut in half. So knowing that earnings are the force that drives the stock price higher, this is an early warning sign that bad things could be ahead for the price of that stock. Now, of course, it's not a guarantee, right? Stock prices move higher based on supply and demand, and if people are interested in buying that company, the stock price could drive higher despite earnings. But at the end of the day, if the company isn't profitable and they're not making money, this is bad news. So we notice here that earnings dropped off around October 21st, October 22nd, and what happened next. So we can see the price continued to stay around the $300 mark for a few days, and then it shot down lower. It gapped down all the way to around $285 per share. And notice the earnings per share and the price of the stock. Both of them are continuing to trend lower. Now, this earnings per share gap down was an excellent indicator that something could be coming with Alibaba, and was a very early warning sign that maybe you should put some stop losses on there and protect whatever profits you do have in this stock. Okay, excellent. We know that the earnings per share fell off, and we know that the stock price came down. That's in the past. So what do we do now? Is it time to buy Alibaba? Well, just as earnings falling were an indicator that the stock price would fall, earnings rising can be an indicator that the stock price will rise. So one of the very first things I want to see before I go ahead and invest in Alibaba is I want to see the earnings per share start to rise again. Now, this is going to be a very great indicator that the company is growing again, and they're able to bring their earnings per share back up. So before I even consider getting back into the stock, I want to make sure that not only the earnings per share have leveled off and no longer are continuing that decline, but they are in fact rising, and the stock price is rising as well. Now, the next thing I want to do is I want to take a look at the free stock analysis that VectorVest offers. Now, VectorVest has a free stock analysis on every stock that we track in the database. And of course, if you're interested in getting this, there's no money required, there's no trial required. All you have to do is go on over to VectorVest.com, type in your email, whatever ticker symbol you want, and it's going to print out a full stock analysis with all of the indicators that you see here and more. So let's jump right into the full stock analysis now. So right off the bat, I see that the recommendation is a sell. When VectorVest has a sell recommendation, it would be an extremely speculative move to go ahead and buy that stock. The sell recommendation is there for a reason. Now, of course, it doesn't mean that you have to go out and short the stock. That would be a speculative move as well. Short selling is speculative in nature. So if you're a prudent investor or even a conservative investor and you're looking to buy Alibaba and add this to your portfolio, according to VectorVest, now would not be the time. We need to see this stock rising in price before we get in. Now, next we can see that the value for Alibaba is currently around $40 per share, while the current price is around $228 per share. Now, this doesn't mean that just because the stock is trading at an overvalued price that you shouldn't be investing in the company. There are a lot of companies that continue to trade above the VectorVest value, and it's all based on supply and demand, right? If the market wants it, the market will pay for it. Just because the intrinsic value is a little lower doesn't mean it's something you shouldn't touch. But keep in mind and know that VectorVest does have Alibaba valued around $40 per share. Now, the next thing we want to look at is upside potential, and to do this, we look at our relative value or RV indicator. An RV for Alibaba is 0.20, which is very poor. Now, this is a long-term price appreciation potential indicator, and it's compared to a AAA corporate bond. So currently, VectorVest is saying you'd be better off investing in a AAA corporate bond than you would Alibaba. Now, of course, we can see this indicator change as the price changes and as it continues to rise, and earnings per share continue to rise, and so on and so forth. But right now, RV is rated at 0.20, and it is a very poor level. Next on the list, and finally, we have our relative safety indicator. And relative safety is exactly what it sounds. It's an indicator of risk. It tells you whether or not this company is risky or whether or not they're safe to invest in. And obviously, the size of the company has a lot to do with this indicator of risk. And as we all know, Alibaba is a huge company. So currently, the relative safety for Alibaba is 1.15, which is good on a scale of 1 to 2. So it is still a safe company despite the pullback. But if we're going to make an investment, VectorVest always advocates buying rising stocks in a rising market. Now, obviously, the stock isn't rising right now, but it may have settled around the bottom price. So if we do see this stock bounce higher, if we see earnings continue to rise, or start to rise, I should say, then this could be a good time to get into the stock. And VectorVest does this for every stock that we track in the database. This isn't just on big stocks or just on Alibaba. We provide this information on a daily basis for every single stock that we track. And that's the power of VectorVest. There's almost no guessing involved or should I, could I, did I make a wrong decision? VectorVest has all of the answers. We take the data and we turn it into information. Now, with that being said, guys, if you like this video or if you have another stock that you're interested in maybe seeing a video on, seeing the stock analysis, or whether or not it's the right time to buy, definitely let me know down in the comments below. Make sure to click that like button if you liked the video. If the subscribe button is still red, I don't know why. I gave you a chance at the beginning of the video. I'll give you another one. Click the subscribe button, join the VV Nation, and let's continue to grow and invest. Now, with that being said, guys, I hope that each and every one of you have an awesome day. And until the next time, see you guys later.